Coming up on Shifting Energy, how will the incoming Trump administration influence and change U.S. energy policies? What does it mean for the nuclear energy sector? And how can investors and advisors be prepared? Stick around for answers. Welcome to Shifting Energy. I'm Thalia Hayden with ETF Guide. We're so glad to have you with us. Today, we're diving into the potential impact of the incoming Trump administration on the nuclear power industry sector. We'll also examine what other potential changes might be on the horizon to U.S. energy policies, and then we'll connect the dots for you with some actionable ETF strategies for your investment portfolio. Joining us now is John Ciampaglia, CEO at Sprott Asset Management. Hi, John. So great to see you again, and welcome back.
Yeah, thanks for having me back. Good to see you.
All right, let's get started. The 2022 Inflation Reduction Act, also known as the IRA, contains hundreds of billions of dollars in subsidies for clean energy and is billed as outgoing President Joe Biden's signature law to combat climate change. How might the incoming Trump administration and Republican-led Congress impact the IRA and the nuclear energy sector?
Yeah, it's a great question. I think everybody's trying to figure out exactly what parts of the IRA may be tweaked. I think it's important to take a step back and reiterate that the IRA was very much supported from a bipartisan perspective. So the legislation came about, with support from both sides of the aisle. I think more importantly, many of the incentives, whether they were investment tax credits or production tax credits, subsidies, etc., were really designed to crowd in public capital from public capital markets. And that was really the government signaling that they wanted to, basically share in some of the risks around some of these industries and new investments and manufacturing and whatnot. And I think it's important to note that the large majority of large-scale projects that have been announced, largely in part because of incentives through the Inflation Reduction Act, have actually been in red states. So I know there's this knee-jerk reaction that if it's clean and green, it's going to be a target of the incoming administration. But I think, if you go down to the state level where these dollars are flowing, I think there will be a tremendous resistance to curtailing those investments because they have created a ton of jobs and are expected to create many, many more. So yes, there probably will be some tweaks for sure. The electric vehicle tax credit is obviously at threat of being reduced or eliminated. But I think the guts of it, which are supporting massive investment in reshoring of many supply chains that I think the incoming administration also deems to be of national security interest, will continue to receive that government assistance.
Okay, got it. Now, beyond domestic policies, international politics is a factor on supply and demand. According to news reports, Russia has imposed restrictions on the export of enriched uranium to the United States. Now, this has huge implications for the uranium market. Can you break this down for us, John?
Yeah, this has been an ongoing saga for the last 2.5 years, unfortunately, since the invasion of Ukraine by Russia, where everybody is sanctioning Russia. And one of the things that has not been subject to any sanctions up until recently has been enriched uranium. And enriched uranium is basically taking uranium in its natural state and increasing its percentage of the fissile isotope U-235, which is what you need to create this chain reaction. And Russia is a big provider of this enrichment service globally. They do this for many of the nuclear power stations that they build in many different countries. And they also supply utilities in the Western world, in Europe, as well as the United States, with this enrichment service. Now, back in August, the U.S. Made a law that said importing enriched Russian uranium will be banned. So that came into effect in August. But there will be a waiver process, and that would be that would grant a company the ability to ask the Department of Energy for a waiver against the ban, so that because it couldn't essentially find an alternative supplier. Some of those waivers have been given out, but what was really interesting to us is that although the hard ban does not come into effect until January 1st, 2028, the Department of Energy has only given out waivers for 2024 and 2025, not the full period. And I think the Russians have clearly picked up on the fact that this waiver process is not going to be for 3+ years, and that the writing is on the wall. So what we saw last week was basically retaliatory action by the Russians that said, well, if you're going to ban us, we're going to ban you. And this obviously has immediate impact on the nuclear fuel supply chain because the U.S. is still in the process of building additional capacity on home soil, as well as many other Western countries are doing the exact same thing, which is let's build our own enrichment capacity to wean ourselves off of Russia. So the big geopolitical chess game that's going on right now is, will the Russians cut everybody off before that new capacity is operational, which will be sometime between 2027 and beyond. So it's a little bit of a retaliatory tit-for-tat move, and it is having an impact on the sector. We've seen the stocks in the sector rally on the news. The price of uranium went up about $4 a pound to $82 in a single day. So it's definitely getting the market attention.
That's true. Now, switching gears a bit, Sprott recently published a research piece at its website, SprottETFs.com. It's called Big Tech Targets Nuclear Energy to Support Their AI Ambitions. Microsoft, Google, and Amazon are making a big splash in nuclear energy, and we've never seen anything like this. So why are they doing this, and how will it potentially reshape energy markets?
Yeah, I think this is a really fascinating development, and it's really about the AI race. And the U.S. clearly wants to be a leader. China does too. And the U.S. clearly has, I think, an advantage right now because it has the technology, it has the big tech companies behind it, but it also has abundant low-cost energy. And the reason why that's important is that these AI data centers specifically are very electricity intensive. And Goldman Sachs recently put out a research report that indicated that doing an AI-related query can be up to 10 times more energy intensive than basically an alternative data center query, like using Google search or doing something in the cloud. So everybody has realized that you not only need the technology, but you need clean and firm power. Clean because many of these tech companies have their own net zero or carbon neutral goals, and firm because they want to have the power on all the time. Obviously, you need to have a highly responsive data center, to basically cover the needs of the world. So many of these technology companies are now, the term being coined is kind of funny. It's bring your own power, meaning you need to go and source your own power somehow alongside building the data center. And so how they're going about bringing their own power is they're signing these long-term power purchase agreements with, in some cases, small modular reactors companies. So these are companies that are building these small or mini reactors that in many cases will be located very close to the data center so that the power is dedicated, and you also kind of avoid the whole complexity and the cost of building transmission lines, which can be onerous in the United States. So it's a very clever, I think, solution that the big tech companies are focused on right now to secure their own power. They're doing it through renewable energy contracts, but more recently they've signed a whole flurry of these nuclear power related deals, which is, I think, really interesting in terms of bringing capital to the sector, which it really needs right now to commercialize and deploy many of these new technologies.
Understood. Now for its 2025 outlook, the U.S. Office of Energy Efficiency and Renewable Energy reaffirmed its commitment to advanced emerging technologies for clean energy and electricity. How is the demand for clean electricity influencing the demand for critical materials?
Yeah, well, I think it's fair to say that, we've talked a lot about energy transition, but I think the term we need to now talk about is energy addition. And this is going to be a key focal point for the Trump administration. They want to dominate across many of these different energy sectors. You obviously have seen a lot of chatter about loosening regulations around oil and gas, drilling in the United States, LNG, that's liquefied natural gas. That's another transition fuel that we think is going to get a big boost from the incoming transition of the Trump administration. And it's a number of technologies that we think are going to continue to receive Republican support. I think it's also important to note is that historically, Republican administrations have been way more pro-nuclear than Democratic administrations. And it just so happens that the Biden administration has been very, very pro-nuclear, which obviously has been a huge benefit to nuclear power stations and uranium specifically. So we think that continues. There are a number of, I think, industries that are deemed now to be national security driven, and many of those are very critical mineral intensive, whether those are for defense industries, semiconductors. And so we do see continued support coming to a number of these critical minerals as the U.S. is really trying to mitigate against China's dominance in many of these supply chains, and as well as Russia. And it's obviously to be determined how exactly the geopolitics are going to play out, tariffs, trade wars, and how they may impact these different minerals and metals. But the underlying fundamentals, I think, remain very strong, and we continue to see investor interest in many of these areas.
All right, one last thing before you go, John. Sprott is preparing advisors and investors for the critical materials megatrend by offering a full suite of critical materials ETFs. Can you tell us more about your unique ETF lineup?
Yeah, well, we think we're in the beginnings of a new commodity super cycle that's really driven by critical materials. And these are not the same materials that drove the last commodity super cycle. Things like met coal and iron ore were huge beneficiaries in the last cycle because China was essentially building 30 new cities and building enormous amounts of manufacturing capacity as we basically outsourced everything to them. This new commodity cycle is going to be more mineral intensive. Things like copper and nickel and uranium that are really important for energy generation, energy transmission, and energy storage. We think they are going to lead this charge, and that is really playing out so far this year. If you look at the divergence performance of things like copper versus iron ore, they really highlight that the new industrial metals are going to be more energy focused as opposed to more historical industrial based. And this is something that we've tried to focus on with our suite of different funds at Sprott. And we really want to provide investors with a broad suite based on whether they want to get pure play exposure to a specific metal that they're bullish on, or perhaps they don't want to make a single bet on a particular metal and they just want to buy a basket of different metals. We also provide solutions around that. But I think the common thread with most of the funds that we offer is that they provide pure play exposure so that you can get maximum upstream exposure to these thematics. And that's why we focused on the upstream part of the supply chain, which is traditionally the mining stocks, the companies that produce these metals, which if metal prices continue to remain strong, should benefit with their higher, operating leverage and optionality.
John, so much to work with here. Thank you for your timely insights and keep up the great work.
Yeah, thanks for having me. Lots of interesting things going on in the world of metals and mining.
And that's all for today's episode of Shifting Energy. If you enjoyed the show, please tell us in the comments section below by hitting that like button. To learn more about the investment strategies and ETFs we discussed on today's program, be sure to visit SprottETFs.com. I'm Thalia Hayden with ETF Guide. Thanks for watching, and we'll see you next time.